Good morning, Predicted Trades family. Hope everybody's doing well. Hope we're ready for another fun, exciting day. And I've got to clean up my chart a little. So, taking a look at where we're at. Down here is an ES chart on the daily. And you can see we're pulling up to the trend line from last year's highs. We zoom out a little bit. We can see that we rejected this same trend line repeatedly over the last year. And we are currently pulling up and testing it now. Come on, toss. Freezing on me. Well, while we wait for toss to wake up again, I'll go ahead and pull up the economic calendar. Because today, in just about a minute, we have a number of things coming out, some retail sales and PPI, Producer Price Index. What's the cost for manufacturers to produce things? Is that going up, going down? So we'll see what that data gives us here in a minute and the reaction to it. We also have a little bit more data coming out at 9:15. We have a Fed speaker right at 9:30. Looks like it's just an interview with Wall Street Journal. We have a little bit more data coming out at 10 a.m., some home buying data, business inventories, and then 2 p.m. beige book. Tomorrow we have jobless claims, some housing data, some manufacturing data, another Fed speaker at 9 a.m. and 1:15. And Friday looks like we just have some home data and some more Fed speakers. And we're starting to get that reaction to that 8:30 data, pushing a little higher. Pulling up kind of close to yesterday's highs. So as you can see, we arrived at that trend line. And we're slowly starting to try to break out. Nothing's guaranteed. Doesn't mean since we are starting to peek through that we are just about to rip. And it's not surprising that once we get to this trend line, we have settled into a squeeze on pretty much every time frame. If we look at ES, we're squeezing from 30 minutes, 1 hour, 2 hour, 4 hour, and the daily. We are pulling up to the top of the daily squeeze, and since we're pushing against it, it's getting very thin. So this daily squeeze is poised to fire to the upside, but we have to get through our lower time frame squeezes. So we're squeezing from 30 minutes up to 4 hours. Basically, we have to get above 40-46-ish to start breaking out of these lower time frame squeezes like the 4 hour. The overall targets to the upside, 40.56, 40.71, 40.87 on our way to get to 4100. We have a 2-day squeeze top up at 4100. So overall, it's if we can break out of these squeezes and this consolidation and push through yesterday's high, we'll be firing every squeeze from a 30-minute to a 4 hour and a daily, firing all of those squeezes, so that momentum should carry us up to the 2-day squeeze top. So that's the overall target. To break out to the upside. If we do take another quick look at the fact that we're at this trend line, even if we do start to break out, we have our recent highs to contend with. 40.82-ish, 41.08. So we're not out of the woods just yet. As we start to break out, we're going to be running into sell signals or old sell orders from back when these candles were made. So definitely something to keep an eye on. You can see we run right up into that squeeze top and then start to pull back. So just meaning that these squeezes will be resistance. And can we push through them and fire? Yes. But we need to also be ready for, come on, there we go. We need to also be ready for the idea that we run into these, we fall back to find support and buyers, we run into them, and we keep doing that while we try to grind higher. Overall, if we do start to have a big pullback, we've found a lot of support this week at 4,000 and 39.96. You can see last week we broke below it just a little, but then when we got back above that 39.96, we have bounced every time that we get near it. Even last night, that is the low, that 39.96. So we've got a lot of support there at the bottom of this 1 hour, 2 hour squeeze. Should we slip down and start to lose that, we do have our daily 200 and our daily 8 sitting right next to each other at the bottom of this 4 hour squeeze. So it wouldn't shock me that we are running into the trend lines from the highs of last year. Wouldn't shock me to see another quick drop to these first daily moving averages, the daily 8, daily 200, and for us to find support there before actually breaking out. That would still set a higher low from last Thursday and Friday. Like, since we took off from those lows, we've been consolidating at the top end. I wouldn't be surprised for a quick dip down, maybe even today, to hit this before actually continuing higher. But we could just as easily hold up above kind of the floor that we put in yesterday. Basically around that 4,005, 4,008. We only reached below that a little bit on some these wicks, but pretty much for the majority of the day, the cash session yesterday, we were above that 4,005, 4,008. So we've got support there. We've got support at this 39.96. Should that give out, we have support at this 39.80. So all points that I'm looking for us to hold if we have a little dip. And if we can continue higher, it's getting up to yesterday's highs at 40.35, getting above 40.40, trying to make it to this 40.56, 40.71, 40.87. All targets to hit to the upside. Now let's go to NQ. Oh, and I guess real quick on ES, I'll just cover. We're holding our 45 MAs. The 1 hour has caught up to 40.10. So we have our support there, just like I was talking about. Below that, 4,000 is where the 2 hour sits. And below that, the 4 hour, man, sits perfectly right down near that 39.80 at the bottom of this 4 hour squeeze where that daily 200, daily 8 are sitting. So our 45 MAs are basically telling the same story as what I just covered on ES, that we have support at 40.10, at 4,000, and then at 39.80. So don't be surprised if we do have a little pullback to those. You can see that we've pushed off these 45 MAs and pushed higher. We've slowly dragged them up to where we're consolidating. So we need to hold those. If we start to lose those, then we could be talking about a change in trend this uptrend that carried us to this trend line, if we start to lose that 4-hour 45 and start to lose that 39.80 at the bottom of this 4-hour squeeze, then we might be talking about a change of trend back down to the daily 21 and below. So it's very common that as we pull up to resistance, we start to consolidate, all of our squeezes show up, and then we have to keep going and break out of those squeezes to fire and continue the trend. Otherwise, this is the consolidation before we start to pull back. You know, thus completing kind of the 4 stages of the market, where we accumulate, consolidate, profit taking, consolidate, accumulate, you know. So let's see if we're going to try to hold our support and push through these squeeze tops to fire to the upside, or if we start to see signs that we're going to give out and lose some of these supports. On NQ, basically same story. We've got 1-hour squeeze a little tighter and near yesterday's lows. So we have support there, kind of near this 11,600, 550-ish. If we can continue to the upside, looking to get through yesterday's highs around this 11,677, you can see we just set new highs, so NQ might try to lead to the upside. We can see that ES did not quite set new highs. So NQ, a little relative strength there. Would really like to see us hold above this 11,600. As long as we can hold there and start to push through the 677, looking to get up to 11,750 and then 11,850, all in the goal of getting back to this 12,000, 12,100, and the daily 200, which sits up above in the top of this 2-day squeeze. If we start to slip down and lose that 11,600, then we want to start targeting back down to this 11,500 at the bottom of this 2-hour squeeze. That's also where I kind of drew this little zone of support from pre-market action that has held. Should we start to give out like that 11,500, then we're talking 450, where the daily 50, daily 8 are now stacked on top of each other at the bottom of this 4-hour squeeze. The daily 21 down at 350. So just marking where our moving averages are. If we start to, or if we continue to reject this level, these squeeze tops, and roll back over, we're going to test squeeze bottoms, and should those start to give out, we need to have targets to the downside with these daily moving averages. Let's move on to ready. And we're coming back down. Heck just happened there? There we go. There we go. So on ready, our squeeze has gotten very tight, our 1 hour, and basically covered the highs and lows of yesterday. So looking for that to hold around this 1890. You know, 1900 is a very big key level for the ready. Basically, we are just consolidating right underneath it and trying to push through. Want to see us hold this 1890, get through 1900, get through yesterday's highs of 1905, start the journey up to this 1920 at the top of the 2-day squeeze. If we slip down and start to lose 1890, we want to target back to 1880 at the bottom of this 4-hour squeeze, and then this 1870 down to 1866, the support that bounced us last Friday. But we also have the daily 8 at 1862. Should we start to lose that support, the daily 200, daily 21, and daily 50 all stacked at 1830. So as we run up into 1900, let's see if we can hold up and push through. If we start to give out support, then we want to start targeting our moving averages below. Yeah, we've gone sideways through our uptrend. But this interests me right about here. Yeah, there we go. So we've started to go sideways. You know, if you connect these lows, it's a very sharp uptrend that we have gone sideways through. But connecting other recent lows that are a little less extreme, they come through today as support right near this 1880, 1885 at the bottom of this 1-hour squeeze. So let's see if we can hold above and keep pushing. We start to give out this trend line and this 2-hour squeeze, or 1 hour. Then we need to start thinking down to the 4-hour to potentially fire back down to these moving averages. In fact, I'm going to throw a little alert onto this so that if we get near it, I get a alert. On to YM. YM was a bit of a lagger yesterday, kept kind of leading to the downside anytime the market was slipping. As you can see on the chart, you know, we looked at ES and Q Ready. They were all basically contained in a tight range yesterday. YM slipped from the top of this daily squeeze down to the bottom of the 4-hour squeeze. And we sat at the bottom so long that it fired to the downside, but we are being held up and did not start to dive. Being held up by the daily 8. So let's see during the cash session if that can continue to provide support. That's also right near yesterday's low on the cash session. So let's see if we can hold around this 34,000, 33,980-ish at the bottom of the 30-minute squeeze, looking to hold there and start to get back up above 34,100 and these pre-market overnight highs to recover the slip down from yesterday and to get back up to this 34,300 and 34,500, kind of the highs of this week. But if we start to lose 34,000 and this daily 8, we want to first target overnight lows down near, just call it 33,900 at the bottom of this hourly squeeze. And if that starts to give out, then it's back down to the daily 21 at 33,750, the daily 50 at 33,675-ish. So we need YM to try to wake up and bounce off this daily 8 to recover back up to where we were, or where we started the day yesterday. You know, it would lend to the other indices starting to break through their resistance and their squeeze tops if YM can reverse on yesterday. Otherwise, if YM continues to remain weak and slip below yesterday, it can drag the other indices back down to the bottom of their squeezes. Apple. Apple was pretty decently strong yesterday. Got up in the morning, slipped back a little bit midday, but held above 135. In between this 135, 136 key level. Now we're opening above 136. So overall, looking for 136, 135 to provide support. I'm sorry, you can even just say like 135 and a half. So basically your pre-market low up to this 136, looking for that to be our support if Apple starts to slip a little during the cash session. And for us to push off of that and through yesterday's highs around 137.3 with the goal of getting back up to 138, 138.8 in the daily 50, which sits at 139.5. Beyond that, I do have levels and zones, but our third Keltner sits near that 141. I'm sorry, third Keltner sits up at our next zone at 144, 145. So if we can build up momentum and break through the daily 50, we want to target up to that third Keltner, but we, still have to get through the daily 50. Let's see if we can hold up that 136, 135 and a half to keep going. If we start to lose that, then we're probably going to visit the bottom of yesterday's range around 134. And below that, we have the daily 21, daily 8 right at our key zone, 133, 132 and a half. So let's see if we can hold up here. Apple will be a big tell for if the market, if YM and NQ are going to start slipping back down, right? AMD. Chips were decently strong yesterday. AMD made a push up to squeeze tops and our key level at 72.3, fell back to those pre-market lows, then fought right back up to that key level. Now we're about to be opening right at it. Still have some of our squeeze tops to deal with. Overall, we kind of want to use today's pre-market lows as support. They kind of cut in the half of yesterday's range. So as long as we can hold above that midpoint, looking to push through this 72.3 and start to break out of these squeezes to the upside with the goal of trying to get up to the next big key target of 75, 75 and a quarter. But we have to get above 72.3, hold it on any pullbacks, get above 73, and then we can start that journey. If we reject and start to lose our pre-market lows, we're going to visit yesterday's lows. And if those can't hold, we're coming back to 70 and 69, where the daily 8 sits, the daily 21, down at 67.5-ish. Amazon. Amazon was pretty weak yesterday, just sold right back down, but held kind of this midpoint from Friday. We pushed up, we pulled back and held, and we pushed higher. So we definitely want to note that point and maybe connect it to our pre-market lows today. As that is your support. So basically, let's see if we can hold above 95.5, 96. If we can hold there, looking to push above 97 and start this journey back up to 100. If we start to lose that 95.5, 96, then we want to target back down to this 92.5 where the daily 8 sits and the daily 21, daily 50 down at 90, 90.5. So gotta hold this 95.5, maybe 95 at the worst today. Below that, we're continuing to sell off back to our moving averages. If we can stay above that, then this was just some profit taking and reloading at a base before actually getting to the target of 100. Google. Google just very much in a wedge yesterday. Basically, it dropped and then went sideways most of the day. We are slowly starting to push out of that wedge to the upside. Overall, looking for Google to stay above 91, your pre-market lows. And if we can hold and start to push, looking to get through a 92 and up to 93, kind of our pre-market highs. Next big key level, 93.5, before trying to get up to this 95, 96 zone. But if we start to lose 91, we want to target back to 90 and back to 89. Let's see, the daily 8 and daily 21 pretty much sitting right near 90. The daily 15 will be sitting pretty much right at 89 at the bottom of this 4-hour squeeze. I'm going to take a quick look at GS because they reported. So yeah, GS reported yesterday. Looks like a bit of a miss on the EPS and slipped down through all of our daily moving averages right back to this key level of 343. So GS banks are reporting this week, and they were a big part of the drop in YM yesterday. So let's see if we've fallen back enough to this key level, and if GS is ready to find its feet, get back over 350 and work its way back up to all of these moving averages above. If we start to lose 347.5, going to come down to test 343, key level. Below that, the daily 200 at 330. So let's see just how far they want to take GS down. But pretty much just back to where we last settled. So it might be a good spot, or maybe they may have taken it down far enough yesterday and ready to load it back up. Not really going to be trading it or anything, just keeping an eye on what they're doing with finance. It's okay for them to rotate out of finance as long as they're rotating into something like tech. Meta basically has a floor it's trying to set here. There we go. So basically looking for us to hold this little zone of support, 134.5, 134.75. Looking for us to hold that and start to try to push back up to yesterday's highs around 136, 137. Key level that we are kind of just coiling, consolidating underneath. If we can break above 137, basically just looking to try to get up to this 140. But we are near third Keltner. We almost tapped it on last Thursday. So it could be time for a little profit taking and break in Meta. If we start to lose this 134, we want to target back to 132.5 where the daily 8 sits, 130 where the first Keltner sits, and then 126.5 where the daily 21 sits. Microsoft made it up to that 240, 241 yesterday and was decently strong to the upside. Looks like it's about to be opening above 241. So basically you want to see 240 hold on any pullbacks, kind of yesterday's highs since we're about to open above them. And if we can hold and continue to push and fire these little squeezes to the upside, looking to get up above 243 to where the 4-hour squeeze top sits to fire that, and then looking to make this journey back to 245 and 250 up above. But if we start to lose that 240, And at the worst, 238. Then we're going to fall back to these daily moving averages below. Back down to 234 and 232. Netflix. So Netflix drew this zone way back last week, and we've held above that zone. Every time we get near it, Netflix starts to push back up. And yesterday we dumped right near it and started a little push, but basically consolidating near this 325. Overall, looking for this zone to continue to hold at the bottom of this 4-hour squeeze. The daily 8 sits there as well. We didn't quite tap the daily 8 yesterday, so wouldn't be surprised for one more quick dip to 232, 322 and a half to tag that daily 8. Looking for a bounce there and to get back above 330 to start this journey back up to 340 and this week's highs. If we start to lose this zone and this 321, 320-ish. If we start to lose that zone, then we want to target back to 315 and 311 and a half, where the daily 21 sits. And below that, our key level at 307. And market holding well. You know, it had that little pop on the data, little pull back, and now we're right back trying to push higher. And if we look at our 45 MAs, this is another reason I love to track these things. We started to push, hit squeeze top. We fall right back to our MAs. This is the kind of thing that you want to see to go long for continuation. It works on the overnight sessions. We get pullbacks to those MAs, and they load up long, right? We get a dip to those MAs, they bounce it up. And this continues until we give out our MAs. So you go long and it works, you go long and it works, and it just keeps working until it gives out. Then you start thinking more short. Just trying to put into context, you know, I did call out puts at one point yesterday, and, you know, I'm always keeping the structure of where we are in mind. When I enter those puts, I'm not expecting us to go dumping down and setting new lows of the week, right? More so, I'm playing a pullback to something like a moving average where I'm locking up those puts and trying the long again. So anyway, NVIDIA, very strong yesterday, shot up to 175 and held up there. Even set some new highs pre-market. Basically looking to hold above 173 on any pullbacks. That's kind of where we bounced on the midday pullback around that 173. So looking for that to continue to hold and for us to push higher to 180, 182 and a half. If we start to lose that 175, that 173, then we want to target engulfing yesterday back to 170 and the daily 200 at 165-ish. QQQ. QQQ just very strong, holding this trend line and heading higher. Yesterday got above 280, held above 280. Now we're pushing up. New highs pre-market. So, I mean, on any pullbacks, you definitely want to hold 280 at the bottom of these squeezes. We want to watch this morning pre-market low around 281.2-ish on any pullbacks. 282 was kind of the resistance yesterday. So even just pulling back to 282 is just retesting the highs of yesterday for them to load up again. But ultimately looking to get up to this 285. Beyond that, something like 290. If we slip back and start to lose 282, we want to target back down to 280 at the bottom of this squeeze. Should 280 start to give out, we are also giving out our trend line that has carried us up the last week or so. So if we give out 280 today and this trend line, then we want to be targeting back to these moving averages below at 277.5, the daily 50, 274-ish where the daily 21 sits. SPX. Small gap up, going to be opening above 4,000. I'm going to draw a little zone here. There we go. So ultimately, looking for us to hold above 39.93. Just call it 39.95-ish. Looking to hold above that if we do dip below 4,000. And if we can hold there, get back above 4,000, looking to try to push up to 4,030. And maybe 4,080 if we can get that breakout to the upside. But if we do start to lose that 39.95, coming to test yesterday's lows around 39.85, should that give out daily 200, 39.78, and daily 8 down at 39.45. SPY. You know, yesterday this 399 was kind of resistance. We did get up and tap 400. But then when we fell back below 399, we never got above. We're about to open above it. So would really, like to see 398.5, 399 try to be our support at open. Kind of those pre-market highs around that 398.5. So looking for that to be support. And for us to try to push back up to yesterday's highs and this zone that I have at 400.3, 400.5. That's kind of the first target up in this 4-hour squeeze. If we can get above that and push for more, looking to break out of this 4-hour squeeze and get up to 402.75, next big key level. And then past that, 405 is a psych level, but my next big key zone is up near 409 and 410, up at the top of this 2-day squeeze. So let's see if we can build momentum enough to fire these squeezes to the upside and get to that 2-day squeeze top, or if we're going to keep resisting these 4-hour squeeze tops, resist that high from yesterday and roll back over. Well, we have plenty of levels here, plenty of support that we have been building up. And any breaks below this daily 200, which sits at 397, that's when it's going to start to get interesting to the downside. 397 held very well yesterday. Pre-market, cash session, never even got down to touch it. Slipped it only a little bit overnight, and then right back up. So 397 is a big key line in the sand. If we start breaking below that, then everything meaning across the board, each name is probably starting to sell off in the thesis to go back down. But as long as we hold above that 397, we're still consolidating and trying to break through this resistance. Tesla was surprisingly strong yesterday. Made a push up to the daily 21 and consolidated there, now having a big gap up right to my next big key level. You can see that we fought up near this 26, consolidated underneath it, slipped down and hit our daily moving averages and 4-hour squeeze bottom, and then fired it right up this week. So all of us that were talking about longs on Tesla last Friday and into this week have been playing out very well, and right back up to key daily moving averages and key levels. On Tesla, if it's just going to continue accumulating, my next levels to the upside would be 139.5, 140-ish, and then 150, and 160, where the daily 50 sits. But that third Keltner sits up near that 160 as well, so that's getting a little bit overbought as far as Keltners go. If we continue to resist this key level and that 140 and start to roll back over, looks like filling the gap is getting back down to 131.5, back at this daily 21, which sits at 130. So those are targets to the downside if we can't get through this key level and start to roll over to fill the gap. And finally VIX. So VIX did a great job yesterday staying below that daily 8 and pushing back down. And we are sub 19 now on VIX. Looks like we closed a hair below 19, yes. Or no, that's the current price, sorry. It looks like we closed a little bit above 19. So basically, let me just grab right about there and connect it right about there. Enter. All right, that'll do. So basically, from about 1935 down to 1920, looking for that to be resistance today. So for us to get continuation to the upside and start to fire these squeezes to the upside, I want to see VIX stay below this 19.2, 19.35 on any bounces on VIX, and to roll over and complete this journey back down to 18. Friday's lows. Big key inflection point, 18, down at the bottom of these squeezes. So that's for continuation if we are going to reject these squeeze tops and start a rollover process. Looking for VIX to stay above 18.5, start to get back above 19, get through this zone, and start the journey right back up to that daily 8 and yesterday's highs on VIX if the market's going to roll over today. So that is it for prep. Thanks for tuning in. Hopefully everybody found this helpful. And good luck today. We will see you in the chat.